All right. Thank you so much, gentlemen, for joining in and giving us all those details as to what that potential foray could mean entering the healthcare space. That's the management of PB Fintech saying that as of now, it's not a totally unrelated business, and the lack of trust between insurance and hospitals is a gap that they are looking to potentially fill. All right. Let's welcome on board our other guests. And on the technical, Sudeep Shah joins in, and we've got Sandip Sabharwal as always on the fundamentals. Sandip, care to share your thoughts? Of course, we have discussed this. Hospital care management services business by PB Fintech. Your thoughts?
That's very interesting because, at one level, we are seeing on the regulatory side, as far as the insurance regulator goes, that the regulations are not so much in the consumer interest because the premium hikes, etc., keep on happening, and a lot of rejections happen, which should not be allowed by regulations. So, at one level, IRDA needs to strengthen and act more in consumer interest, which it acts more in the industry interest. At the second level, what the PB FinTech management is saying is right, that there is total lack of transparency as far as hospitals go on the charges they do, whether it doctor charges, hospital charges, operation charges. It's so once the patient goes in, they don't really know what they'll be coming out with, unlike any other service you take where you know what your costs will be. And I think that creates distrust between insurance, uh, insurers as well as hospitals, etc. And the ultimate sufferers are the patients. Now, PB FinTech's foray is interesting actually. So I would not say that it's offense. I can't say it's negative because one, there is huge demand for uh, uh, let's say in inverted bracket affordable uh, hospital services where the large corporate hospitals are dominating this space and they are charging any amount they want. So it could potentially be successful. And if they keep their investments staggered and limited, then it could actually be value additive in the long term.
Okay. Sandeep, the top story is China's comeback. It's been a stunning comeback. What does that mean for India in the short term? Could that help metal stocks? Could that have an impact on flows? Everyone thought that FIs are back and they're real. Could that thought get challenged?
See, sentimentally, it's positive because China is now number two as far as emerging market allocations go, and with the recent up move of 20% in the indices, it could again take the top spot in the emerging market basket. So at one level, if the overall emerging market flows improve, India being the highest allocation today, they'll get their fair share. At another level, at the active allocation level, there could be more flows going into China. Now, if you actually remove aside the euphoria and actually analyze what they are trying to do, it's more about trying to improve sentiments, and they are putting their own money into their stock markets. Obviously, the stocks will go up because they are so underowned today. But whether the real economy can be revived or not after such a huge overinvestment cycle and where everything is in oversupply is debatable. So I would think that it's good this upswing is happening. It's good for sentiments, but frankly, in my own analysis, don't think that it will lead to any significant revival in the Chinese economy. And to that extent, we could again see things going back to, let's say, mean after this move.
Because of this sentiment, which is the China sentiment, metals always tend to rally. And we've seen evidence of that already. So, Nuresh, are we in for another deep swell for metals, 5-7% coming soon?
Looks highly probable. We've seen already one part of the move, but the kind of rally we are seeing in Chinese markets is along with the fact that we are seeing a similar uptick in the base metals as well. So right now, as I see, iron ore prices on the futures are up 6-8% today. So you have a little bit of a positive impact for all the steel side also. Aluminium prices have pulled up quite well over the last few weeks. So overall, when we start seeing the commodity prices also go up, that really does well for the metal names. So out here, we've seen a breakout comeback in Hindalco hit a new all-time high. Nalco came very close to it. Vedanta has continued. And today could be a day where even a Jindal Steel and NMDC could participate. So a 5-7% move on at least the steel names looks very possible. And on dips, aluminium still remains the bet.
Sandeep, how do you see October being different from September? September was all about flows and Fed. Do you think October could be all about earnings and festival season?
Yeah, it has to be because the earnings will start and the festivities will also start. Now, the key is that what how the demand situation pans out in India in the festival season. So that to that extent, October becomes important because we had a significant rally this year, and earnings need to support the rally. So to that extent, that is something we need to obviously track. September, frankly, surprised me significantly with the kind of move which we have seen. And let's see what October has in store.
So Sandeep, in this rally, where are you looking at reducing or lightening your portfolio? And if markets fall, where are you looking at adding some stocks?
We are already at 12 to 15% cash allocation. Now, I'm more on the camp where we ride whatever we are holding because I'm comfortable with the stocks which we hold, and then wait for opportunities to deploy this money and any additional money which keeps on coming in, wait for that. So deployment, I would think that it will be very stock specific, but largely I think capital good infra space if stocks correct, defense space if stocks correct. So I think those will be two interesting spaces to be having a lookout on. And then I think when the correction happens, because you have a few stocks you want to track, and then when the correction happens, then whichever corrects more, that's where you allocate. So I think it's very dynamic at this stage.
I missed the first theme I got to, second theme I missed it, Sandeep.
So on the defense theme, I think we've seen from the euphoric levels, there has been some corrective moves. But among the various themes of investment which are playing out in India, I think that's the most durable one. So that's where I think if we could get some stocks cheaper, because even now valuations seem a bit extended, I would be keen on those.
Why defense, Sandeep? If I may just come back with a follow-up question. I mean, what is that you like about it? Okay, order books is growing, but are the defense companies future ready? The world is talking about drones, and Indian defense companies are still making ships and submarines, which may not be the future way of defense fighting.
Yeah, so the investments are going all across. So there is a deterrence, and then there's something on the attack mode. So obviously, as we all observe, that it's all about air power now, and to that extent, like HAL is there, but then I mean, for the latest generation fighters, obviously we don't have the facilities. But on let's say the entire satellite themes, the even on drone, there are investments happening on automation, on getting future ready in terms of being able to track things and operate it in a precise manner. I think a lot of so things are happening in India, but we are not really there, and I think we will be. I think it will be at least a decade or more when we actually get there.
All right. Meantime, Naresh, let's get in a take from you as well as to what the outlook is on some of these stocks that were drags in trade on Friday's trading session. What's the view on the charts of something like a JSW Energy? Have you had a look at an Aavas Financiers or Godrej Properties?
So JSW was a move which was surprising given that the stock had actually hit a new all-time high a few days back. So for now, it looks like a short-term top and again getting back into a consolidation. The longer-term trend is still positive. Aavas Financiers is again a stock which has been consolidating for the last 1 year. Every time the stock comes to 1900, 1950 levels, The stock has pulled back to 1400. So for now, once it sustains 1950, that is the time where you call it a reversal. So at current levels, would wait it out. It could consolidate much longer. Then going to Godrej Properties, the stock had seen a good run over the last 4 or 5 sessions, went up from 2900 to 3400, taken a pause. And 3400 was the previous high back in July. So a little bit of a negative reaction from such resistances is normal, but the structure is positive. It remains a buy on dips to closer to 3050, 3080.
I want to go back to this easy trade, which is China comes back, metals go up. Is there merit in that trade for a trader? Sudeep? I think he cannot hear us. Or maybe there is a bit of an audio problem.
Is it for me, Nikunj?
That's right, Sudeep.
Yeah. Good morning, Nikunj. The way we have seen metal stocks shape back now, if you see Nifty Metal in any case was in a long-term uptrend. So I see these news which are just coming out of China are right now just correlating. But if you see a longer-term trend in case of metals, right from September 2022 and March 2023, we have had a very good rally in the metal indices. We've seen metal index, Nifty Metal move from 5,000 to almost say a high of 10,060 in May. And thereafter, we saw this consolidation, a slight profit booking from higher levels. And once again, we are back to the old highs. So it's just that the last couple of weeks, the rally is coinciding with this China pullback. But yes, the overall trajectory of the metal index itself is quite stronger. So it's just this China news has just been an add-on, and I feel from the current level also, if we look at the metal index, this is headed up quite. It's strong and it could test 10,500, 10,700 levels on the upsides, which essentially means an upside of 5 to 7% from the current levels in the coming few weeks.
All right, Sudeep, appreciate your time. Thank you for joining us. Sandip, the first one off the block will be IT. And where the IT index was same time ahead of the earnings season versus where it is now, there seems to be consensus view which already has built up, which is that worst is behind us. And now gradual but an expansion will happen. Are we in for a surprise this earnings season from IT, or are we in for some disappointment?
Very tough to say, Nikunj, frankly, because the commentary and the interactions with IT companies indicate disparate views. Like there are some companies have indicated some small uptick. There are others who are saying that the situation remains the same. Accenture results created some excitement, but again, they're out. If you look at the guidance for growth, despite them being ahead of most Indian IT companies in terms of AI investments and getting order flows from that segment, the growth indication is just 3 to 6%. So in that context, as you rightly said, when most of the stocks have already rallied 20-25%, then it needs a significant positive outlook change for stocks to go up further higher. So people should be cautious at this stage. I don't think we should be trying to go overboard investing into this sector till we hear out the companies.
Okay, meantime, some of the other stocks as well that we'll be tracking in trade today include some of the paint companies, Berger Paints and Asian Paints. Morgan Stanley has an underweight rating on both of these stocks, and they believe that the lower commodity costs, that is going to be a key trigger for them. And FY25 earnings, they estimate, is going to be higher by about 7% for Berger Paints and 4% for an Asian Paints. Sandeep, lots working in favor of some of these large paint companies, but there is also that massive consolidation that we are also seeing within the space, lots of new players entering the fray. How are you looking at some of the well-established paint players?
Well, the sector overall should be avoided. We've seen the stocks come back 15-20% from the bottoms as the raw material prices plummeted. There was news flow on some price hikes by these companies. But on the other hand, because Grasim is trying to make a foray and gain market share, there's also news flow that they are increasing incentives, credit terms, etc. for the dealers and customers. So the impact of that will be further seen over the next few quarters. So overall, sector outlook should be cautious.
Always a pleasure. Thank you for joining us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.